TheoTrade. This is Don Kaufman. October 19th, 2020. 10 minutes left inside of the trading session with the S&Ps down some 43 handles. And here come the sellers. Listen, Nasdaq actually taking the brunt of the hit, down 1.5%, but it's all about the monsters of tech. And the monsters of tech, that's our conglomerate symbol. That's Apple, it's Amazon, Facebook, Google, Microsoft, all taking a big hit. Again, over a 2% move to the downside. Volatility starting to pump into this marketplace. As we come into the cash close, you can see some of the sell side activity starting to accelerate. Big question though, is what you're seeing on the screen right now. This is going to be a little bit of a flash in the pan. Is this going to be short-lived sell-side activity? Again, you got a nice bump up in volatility, and we're going to explore all of these concepts momentarily. Couple things though. So last week, one of the things that I had mentioned last week, I screamed it out, last call to buy some volatility, and that is precisely what we did. So we bought some volatility. I've also got a number of short positions on, which I kind of examined a little bit on this past weekend's update. And net people, these are the kind of days that that trading is really made of, especially when you're positioned right. That is a decent P&L for a one trading session. Well, P&L, we're about $18,000-$19,000 with the SPOOs only down some 46 handles. And again, in a very large part, this is due to the fact that I've been buying volatility with both hands and placing a few more, additional short positions. So as I said, I want to get to work on this front because one of the key questions that, of course, you're going to ask with this kind of sell-side activity, again, is it going to be a flash in the pan, right? Is it going to be short-lived sell-side activity? And I'm going to try to answer that with a couple of aspects. Number one, anytime you start to see a little bit of flush in the marketplace, you ask the question, all right, was there a catalyst? Sure. You can point out the fact that the stimulus, program may not happen, yada, yada, yada. So there's your catalyst, which of course kind of sparked the lack of stimulus program. It looks like is going to spark some sell side activity. It did just that. But really, you got to go bigger than just the catalyst, right? Because there's always news popping out, and we've been a headlight-driven marketplace for quite some time. So I want to read into a little bit about volatility, and to do that, I'm going to go to the volatility futures. Now, the volatility futures, you can't just look at the two-day volatility futures. That's too short of a time frame. You got to look out. You got to look out here like the 30-day vol futures. They're up, okay? But this is not a huge bump in volatility. Okay, for the fact that the S&Ps are down, 1.33% here, that the Nasdaq is off now 1.6%. So volatility, quite frankly, is a little bit lackluster. If you do look at the VIX, of course, everybody loves to look at the VIX. The VIX got, again, a little bit of a bump up over here, but this is not, realized fear. All of a sudden, we're like, oh no, here we go. I mean, listen, we're not even over a 30 VIX, and all we're doing is, bumping our head up on the ceiling of where we've been recently. So, right there, you got kind of the volatility factor. We're not getting crazy. Down to the bottom of the screen over here, I like to look at the VVIX. That's the volatility index. That too is just towards the upper end of the recent range over here, but nothing to see here. Now, let's not discount the fact that the VVIX is closing in on 120. 120 VVIX in any given marketplace would be absolute sheer and utter chaos. But hey, listen, you got a 50-point move in the S&Ps. The Nasdaq's down some 200 points. Yeah, the VVIX is coming up, and it's, anything of a VVIX north of 110 is, it's on. Like the marketplace can get absolutely wicked over here. But the point that I'm making here is the VVIX is not necessarily, skyrocketing on the sell side activity that we're seeing. In addition to this, I actually was looking at the S&P volume. Now, today was an incredibly light trading session coming in early in the morning, coming into the bell. There's only like 160,000 contracts that had traded pre-market. The day was just dead. I mean, you start looking here like the lunchtime hour. We're lucky to do 1,000 S&P contracts. Obviously, some of the lack of stimulus picked up some of the volume in there. But net, one of the points that I wanted to make here, I mean, you got a day that, again, the S&Ps, they're going to close down almost 1.5% over here. Does that volume really stand out to you? No. So we don't necessarily have a huge amount of volume. We don't have volatility, vaulting through the roof and volatility exploding. Okay, quite frankly, the bonds, this looks like any other given, trading day, and the bonds have not necessarily picked up, meaning that the bonds are not per se in like a duck and cover, okay? If you look at the dollar, all right, I've been rather bullish on the dollar, and I'll tell you why. I've been bullish on the dollar when the S&Ps sell off. So what you're seeing right now, okay, is just one anomaly, one day. At this point, it's one day of sell-side activity. Now, okay, listen, I'll take it. Again, from a P&L standpoint, I'll take it, okay, all day long, right? Up $20,000 in terms of P&L with only, $94,000 total allocated in here. That ain't bad. But from where I'm standing, like right here, right now, okay, I don't want to get ahead of myself and think this is it. This is the beginning of the end over here because we have low volume. We have a rather soft dollar. The vol bump is a little bit lackluster. Again, as I was saying, like volatility isn't exactly pumping, heart pumping to the upside. There aren't too many standouts in here. This is actually correlation at its best. This is actually what I kind of term a full court press into the close, and that happens to be, listen, there's nowhere to hide in this other than what? Intel, which of course has earnings this week, Schlumberger, which had earnings last week. Nevertheless, the point that I'm making here, there's nowhere to hide. It is asset class being flushed across the board. But what we really want to do, okay, is to justify some of the move that we're seeing on the screen right now. I want you to come over here to expected move. And this is where things are going to get interesting because on the week, and I was talking about this on the weekend update, I'm actually going to open Trade Flash over here, and I'm just going to show you a switch gadget and cruise over to the scratch pad. On the weekend update, I was talking about the fact that there was about an $81 expected move. And I reiterated on the weekend update, you got to be careful with that. So the question is this real sell-side activity? The answer is going to come, okay, on the verge of breaking outside the expected move. And here's the interesting irony. The expected move this week, the lower edge, okay, of that expected move, call it what you will, it's right around 3,400. Literally, it couldn't be a better number inside of the S&Ps, and we're about 22 handles off of the lower edge of the expected move. So where all of this, again, as I said, some lackluster sell-side activity. It doesn't matter that the S&Ps are rocking to the downside. The Nasdaq is off 200. As I said over the weekend update, the Nasdaq's had like a 200-point, 300-point range every single day. So to see, oh, wow, it's off by 200 points, okay, that's not all that substantial. In fact, it's worth actually bringing up the Nasdaq and come on, this looks like any other trading session just because it's to the downside. And, if you're not aware, look at this. Oh, but still my heart. It was 5 down days inside of the Nasdaq, and today it's starting to really accelerate. But it's not doing it on heavier volume, and it's not necessarily doing it on increased volatility. I think that the key to this, okay, this particular week, again, it's the edge of the expected move. And what you're going to see is if you crack outside the edge of that expected move, that's when things are going to get downright nutty. That's when volume would pick up. That's when volatility would rip to the upside over here. And I think you really want to look very carefully at that 3,400 level inside of the S&Ps. You say, why not the Nasdaq? The Nasdaq, okay, and we're actually going to cruise to the QQQ for a second. I'll go over here to auto expected moves. The Nasdaq, all right, is also, of course, seeing some sell-side activity, is more than a hop, skip, and a jump away from its expected move. But the Nasdaq isn't what drives order flow in this marketplace. The S&Ps are. And I want to reiterate that time and again because people get lost in that kind of notion that, you know what, it's great. So the Nasdaq sees a little bit of sell-side activity, but that's almost like an anomaly off on the side. You have to have the S&Ps specifically break outside their expected move. And again, to be really, really specific, it's 3403 is the edge of that expected move. And cracking below that would be rather devastating for the S&Ps. As this week actual progresses, okay, look for volume to possibly pick up inside of the S&P futures. Volume starts to pick up, you're going to see volatility pick up. Okay, then the 3,400 comes into play. We crack outside of it. Okay, the marketplace will dynamically hedge and actually push us into sell-side oblivion. So right now, hey, great. Some sellers have finally shown up. But take it for what it's worth. At this point in time, it's a drop in the bucket. Let's see if this has some continuation, see if we can actually crack outside the lower edge of that expected move. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.